wonderful people of the internet. My name is Caroline Kihugu. Welcome back to my YouTube channel. In case you're new here, welcome. And if you are a returning subscriber, thank you, my friend, for coming back. Today we'd like to talk about unit trust. And to understand what unit trust is an investment scheme that pull money from various investors and are managed by professional fund managers who invest the pooled money in a portfolio of securities such as stocks, bonds, and other money market instruments or other authorized securities to meet the objective of the funds. Simply what this means, or unit trust fund means, I invest my money, I give my money to a professional manager, the other person gives his or her money, and the other one and the other one. Then together, all our investments is invested somewhere, like the treasury, bonds, the bills, and all that, on our behalf. Like, for example, if you're investing in stock market and you know that you do not have enough knowledge, then you give your money to the professional manager, the other person who knows nothing about treasury bills, and maybe they wanted to invest, they give money to the professional manager. And my money, your money, the other person's money, together this professional manager invest. And professional managers are regulated by the Capital Market Authority. So you cannot just come from anywhere, take our money and start investing. You have to be regulated and governed by the Capital Markets Authority. And how you earn money on unit trust is through dividends, interest, capital gains, depending on the asset class the fund is invested in. There are various types of unit trust, and one of them is the money market fund, that is MMF. These are funds invested in short-term debt securities like banks, short-term dated treasury bills, T-bills, and commercial papers. MMF are low risks, and these are best for the averse investors who wish to earn high interest, but then they do not like risking a lot. The other one is equity funds, or EF, and this one is the fund by ownership in a business. Mostly these businesses are in public traded stock and are best suited for investors with high risks, and in return they also make high returns. The other kind of unit trust is the fixed income funds, and these are investments in short-term debt securities and aim to offer a reasonable amount of interest, return, and capital growth on investment, e.g. the treasury bills, the treasury bond, and corporate bond. They are low risk and are suitable for averse investors. The other one is the balanced funds. Balanced funds are good for investors who seek to invest in a balanced portfolio, offering exposure in all the market sectors. One thing to note is an investor should invest in a fund they feel safe and secure about, and should get a recognized and governed manager by the Capital Markets Authorities. Someone would ask, why should I invest in unit trust? One, because of security. We know these people are governed and they are watched, and it is a requirement for them to keep the investments open. So since they know that they are governed, you feel like your money, you will know that your money is secure once you invest in them, once you trust them with your money. Another one is because of low risks. Your money is taken care of by a professional, and who mostly knows the market very well and knows what is necessary to be invested in at the moment. So there is low risk, unlike when you're investing yourself in maybe stocks and you do not know what stock should be bought at what time and all that. So it is low risk. Another reason as to why you should invest in unit trust is high returns. One thing we know with the unit trust is they guarantee you a better return, unlike when you just save your money in a bank that sits there. But then we know that because these people know whatever they are doing and they're investing in the right kind of market, then it is more guaranteed to get a higher return than when you are selling it yourself and you do not know what kind of market what kind of investment you should invest in. And one thing to note with this kind of unit trust, one thing to note with this kind of investment is, as long as you let your money keep growing, even if you invested in the high risk like the equity fund and maybe the market went down at the moment, as long as you do not take out your money, then you are guaranteed that you will not get a loss. The only time you get a loss is if you withdraw, but as long as the money is in papers, then you are not getting losses, because if you wait until markets are doing well and you withdraw at that time, then it means that you do not lose your money, but then your money is giving you more returns. But then if you decide to withdraw when the markets are down, when the markets are bad, that is when you get your loss. Another advantage, or the reason as to why you should invest in unit trust, is because you can invest with as low as you got. Like for example, there is the Saiton and there is one for Safaricom called Mali. You can invest with as little as 100 bob, which will earn you money daily, but then it is compounded per annum, and that is one great guarantee. And maybe you are worried that if I invest my money, then I will have to maybe wait a year or so to take it out. No, if you got an emergency and would like to withdraw your money, then you can always get it at any time, so no need to worry about it. I hope that is beneficial. I hope you learned a thing or two. If you have a question, kindly comment below and I'll be sure to answer as many as I can. Till next time, bye.